Well, it may not feel like it to some of us, but Australia ranks as one of the wealthiest countries. SBS Finance editor Ricardo Goncalves joins us now. And Ricardo, that's even with billions of dollars of government debt.
Anton, I want you to take a look at this. What we're about to reveal is the value of net public debt. That's all government debt minus investments in the public sector, like RBA foreign exchange reserves and future fund assets. And right now it stands at roughly $320 billion. I'll step to the side there so you can see that there's more zeros behind me. While that may seem like a massive number, it is one of the best globally, and it hasn't hindered Australians from becoming one of the wealthiest people in the world. As the SBS documentary series Struggle Street depicts, not everyone in Australia lives in the lap of luxury.
That's the hardest part, mate, trying to keep up with everyday living.
Even if data points otherwise. But comparatively,
Australians do come out pretty well.
No matter the measure. When it comes to GDP per capita, which places a value on how productive a person is, Australians are in the top 3, according to the International Monetary Fund.
We might not think we're rich, but in comparison with other nations, we are in fact a wealthy nation. Global
investment company Credit Suisse says Australians have the highest median wealth per adult when measured in US dollars at $225,000, followed by Belgium and Italy. That takes into consideration income and assets.
Well, that reflects a combination of a healthy share market over a long run of years and healthy gains in Australian house prices.
Australians are having to work harder to buy a home though, especially in Sydney.
No further rise at $1,050,000 is sure.
Where it takes 10 times the average full-time annual income. It was just 5 times 30 years ago. Bernard Salt concedes income growth has slowed.
It's a little bit like when you're driving a car in the country, you're travelling at 100 kilometres an hour, you come into a town, you're travelling at 60 kilometres, you feel you've slowed to a walk. The reality is we've come from a high base and we're slowing down, but we're still progressing.
The government, meanwhile, will need to lift its income to pay down its borrowings. While net public debt relative to the economy stands at 20%, it is 4 times lower than comparable economies like Japan and the US.
In the great scheme of things, Australians don't have a lot to worry about at the moment.
Shane Oliver says the government has 5 or 6 years to make inroads before the ageing population places unsustainable pressure on the public purse.
And if we don't slow that in some way or control it in some way, we could end up with a debt problem down the track, which could mean that tax rates would have to rise, so that's a burden for the Australian households, or government spending, welfare payments would have to be slashed.
I think the issue in Australia has been, and probably always will be, how we carve up the pie, how we distribute wealth.
We'll get an idea of that distribution tomorrow. OK, let's take a look at the Australian share market now, which closed a little lower after a volatile day. The big banks and Telstra were the worst performers. NAB remained in a trading halt because of its capital raising. The major miners did finish higher thanks to a recovery in the iron ore price, which has risen 30% over the past few weeks. Japan's Nikkei rose as the People's Bank of China cut the official interest rate there by 0.25% to boost its economy. The Australian dollar is buying about 79 US cents. It's mixed across the other major global currencies, and on the commodity markets, both gold and oil are firmer. And just before I go, an interesting note by economists at NAB today. They believe the RBA has reached the end of its rate cutting cycle and that the next move will be up, but not until very late next year. Anton and Janice.
Thanks so much, Ricardo.